All right, bet. So let me talk about this shit that not necessarily a lot of people don't. You guys see my screen, right? Oh wait, no, this isn't video. My bad. You guys can see the screen, right? Let me see. Let Alexis in. You got it. Y'all got to turn your mics on, bro, because it should be yeah.
Yeah, we can see it, bro.
All right, cool. Because I can't see you guys when I'm putting it like this. All right. So the reason why I want to mention this, bro, is because a lot of people have came to me either on social or sometimes even you guys, not necessarily. No, you guys, because you guys get a better understanding of like the whole business credit shit, but a lot of people don't really have like a newer mindset in regards to the whole idea of obviously paying stuff down. They're kind of just like, just pay it all, I'll pay it off, pay cash, and that's it, right? And there's pros and cons to that, and this depends on the situation. But I'm just talking about the fucking strategy that we're doing right now. Me and my boy Alex, that's got us from fucking 0 to 7 units within less than fucking 6 months. So it's basically us getting a unit almost every other month. And this we're starting from 0, no handouts, no fucking rich parents, none of that shit. So the reason why this is literally right now, right? You guys may see this like, what the fuck are you talking about? But I'll explain the reason why I have it in this position, right? People have fucking had higher limit or higher balances, low balances, but this is business credit, so it doesn't fucking matter, right? It has to make sense for you to pay it off. Like for most things, it has to make sense. But for this sense, it does not make sense for me to pay this off, right? With the current situation that it is. And this is a real world scenario, telling you guys exactly how the fuck it is. This is the only like OPM, right? Other people's money, aka balance on the card, or just like money that we're leveraging, right? Business credit that I have, even though I know that I should be doing a lot more, like buying fucking 2-3 units all on business credit cards. And the reason why I mention this is because this card is 0% interest. It doesn't affect my business credit. I mean, it doesn't affect my credit score. And alongside that, I only owe 1% of what I borrow. So this 16 grand allowed me to buy a fucking unit alongside some cash I put down to buy this unit that's generating $23.50 after all expenses, bro. So this is after the property management take a cut. This is coming out from the property management company. So if you really divide it in terms of just the fucking amount that we take home, right? Which is right around like $1,400, right? This is the mortgage that's right here. This could get paid down just in a matter of time. And I don't even know when this fucking interest period ends, which it still has like 6 months. But I could go and just get another card and transfer it over, which I'll talk about in a little bit. But I'm in a position where I have money that's growing, bringing in income, alongside that building me equity, which I could go and fucking leverage for something else, while this is being in a position where this is not affecting me, right? Like I said, I can pay this off. I can pay my car off, but it's not gonna help me, right? It's gonna hurt me more than it's gonna help me. And the way I always see it in terms of business, like everybody always gets fucked, bro. Like there's always there's not a win-win situation for everybody. Someone has to compromise a little bit. But in this situation, I'm winning over Chase because Chase bought the house for me, but in reality, the profit can be rolled over to buying more houses or paying this down. But Chase basically bought the house for me, right? And technically, I never really need to pay this off because I can just get another 12 months. But like I said, everyone always gets fucked somehow, right? In some sort of fine print or whatever the fuck it is, whether it's your time and energy you allocated that was a little bit too rough. So it's very rare that there's a win-win scenario for everything. Like it's not impossible, but it's very, very, very rare. So say for example, like I said, Chase gets fucked, not me, right? I don't remember exact month where this ends, but I could literally go and transfer this over, right? Liquidate this, transfer this balance over to here, and I have another 12 months. So it's like, why am I going to pay this off when the money that could be used to pay this off could go and buy me more assets that I could go and leverage to buy, either a new car, pay off my car, whatever the fuck that I want, while I'm in a position where Chase is essentially funding the whole thing. 0% interest doesn't affect my score. This is all while me keeping cash on hand, right? I'm in a position where I'm literally going to show one of the fucking bank accounts that I have, which I'm using later on. I saw, Freddie, I don't know if you did it on accident in regards to raising your hand, but I'll do that shit at the end of the call, bro, just because I want to make sure that everyone sees it and then everything makes sense. But I'm keeping the cash on hand, which I can go and do more things. Like right now, me and my boy Alex are about to get the appraisal back from this property we're buying in California. But if I paid everything off, right, paid my car off, paid this off, I could still probably buy the Bakersfield one, but I wouldn't be able to go and just buy all the time, right? Like I said, this method got us from 0 to 7 units in fucking 6 months, right? And this is all while being cash flow positive, being in a position where it's just in the back of my mind, it's just chilling, right? If you guys are in a situation where like, okay, well, I maybe want to use a relative or a business or someone that's a private lender, right? The reason why I never really like to do that, especially if I'm just starting, is that the rates may be scandalous, bro. Like scandalous. Like you may have someone that his uncle or cousin that's like, I have the money, but I want to charge you 10% rate. It's like, if you're doing a rental, it doesn't make sense. Like real talk, it does not make sense to go and, borrow from a private lender if you're in a position where it's a rental. If it's a flip, maybe, but I wouldn't do it if it's, if it's a rental, because of you being in a position where you're gonna have to bite that for like 6 months till you can refinance out. And like I said, you basically have a boss as opposed to being in a position where it's a partner. So this is not something you want to deal with. And the people's emotions are ever changing, and you don't want to wake up one morning and someone's on your ass because they don't have their full ROI right away. It's like, if you have this, right, which is being in a position where ultimately it depends on what type of leverage you want to use, whether you want to use a fucking property you may own already, whatever the fuck it is, but not being in a rush to pay things off. It's better to buy multiple properties, leverage it, keep acquiring more cash flow. And alongside that, these companies, like I said, don't give a flying fuck whether you pay them off. They actually don't even want you to pay them off, because that's how they make money off interest. But you're never going to pay interest if you do it correctly. Like, I've never paid interest on any fucking credit card I've ever had. Alongside that, numbers, right? So this is a high yield savings account that I have. I have like fucking 5-6 bank accounts, right? But I'm probably just going to send a wire from this to escrow to go and buy the property me and my boy Alex are buying, right? But this could go and pay off that balance. And you're probably like, oh, why don't you do it? But it's like, why would I go pay that off if I could go buy this cash flowing asset, which someone else is going to give me that profit from it, which I could go and pay off my card. So basically let someone else pay my card off. Alongside that, it's also generating interest every single month just from leaving it in here, as opposed to fucking paying it off and then you're done, right? Let me go to the next thing. So the reason why I'm buying this property in California, because you always have like, oh, like we always talk about Section 8. Like, why are you going and buying, property in California where the profit's a little bit less? Because I want the mix, right? I want the diversification. I've always said that everything can make sense if you fucking make it make sense. And in regards to this situation, the property does make sense to buy because it's purely for appreciation. So that's me behind it, right? Literally just with it. We're buying it at $740,000. It's 100% financing because of the way that we're orchestrating it. If this property gets appraised, right, by any amount that's higher than the purchase price, that's our equity. So say, for example, I waited fucking a year because I wanted to buy everything, not have any sort of business credit debt, none of that shit. I want to do all my outright. I think a year is probably pushing it. It'll probably take you 3 years to do the shit that me and my boy Alex are doing because of the way we're orchestrating it. It's like, would it be faster for you to go and do this and get seven units in 6 months, and you have this, and then you refinance and pay this off, or trying to gather the capital for absolutely everything? So for example, this property we buy $740,000. Say we do a refinance, it comes back at, I don't know, 700 and fucking 80,000 or 770, right? That 30 grand could go straight into our pocket because it's a new build. It's fucking built this year. That 30 grand, right? The difference, because they obviously have to, when you refinance, you pay off the old loan with the existing new value. That could just pay this off. It's like, what would you rather have? That fucking 16 grand? I mean, would you rather have that time in regards to the timeline of you being in a position where you're saving outright to buy it outright and feel good that you didn't have any sort of business debt, or be in a position where you have the time to go and do all these things in a shorter win frame, and you got the fucking refinance, which is literally the bank's money going to pay this off. And the bank's money that you're acquiring from the refinance also is not taxable because it's considered a loan. And it only increases your monthly payment from obviously the rental right here by like $20. So it's like, what makes more sense to you? Going and fucking saying that you could go and pay everything off outright and you're not leveraging a certain credit or OPM or anything like that, or just leveraging OPM, getting it all faster, and then you eventually just refinance, add $22, which somebody else is going to pay off, right, in this unit, and you have no debt. And even if I go and this refinance is at $800,000 in 6 months from now, I'm still probably not going to pay this off. I'll probably just transfer it because that 60 grand could go and get me probably two or three units that are Section 8, which are going to generate like $2,000 a month. And that will pay this off in fucking a matter of like 8 months. So it's like, I'm in a position where I could go and pull from 4 different things and be in 4 different opportunities while having, different interests in different things, right? The California property, the Section 8 property, all while being in a position where all I fucking save, I save not only a matter of just finances in regards to being in different positions, but time, bro. It's going to take you so much longer to save all that money by yourself. And the more money you borrow correctly, the more money you make. But it's just a matter of who the hell you're borrowing it for. Like I said, I would never really borrow from a family member. if it's my first time or anything along those lines, because like I said, it's basically like having a boss, and it's just something you want to do if you're not experienced with that. Like I said, that 60K, if it appraises at at 800,000, which I'm very confident that it will, it's not taxable, and it's considered, and it's also in a position where it's considered a loan. So it's also not susceptible to, not only capital gains tax, but income tax. So it's not gonna hurt me out. It's not gonna hurt me at all. And the reason why I'm also refinancing, besides being in a position where I can buy more cash flow, because this property is purely for appreciation, it's really not going to net that much shit, is because then I'll be in a position where I can either go and buy another California property, which would be a triplex with another more appreciation, or I can go and buy more passive income with a Section 8. But if you don't have the mix, then it's a little bit harder. But the reason why I went for the Section 8 first is because then I have the safety net and the cash flows coming in to go and take bigger risks. Right, because this fucking mortgage for this property is about almost $6,000. But it's like, would you be in a position? Would you be in a better position if you took the risk with $6,000 as your first time, or when it's fucking $600? It's like it's a no brainer. Like, you just take $600 risk, boom, you get your cash flow, and you can take more risk because you really don't give a fuck if there's a vacancy or nothing like that. So also the rates dropping. But another thing is that the reason why I'm so big on like the whole idea of leverage, not letting your money sit, if it's not growing, it's dying, is because there's a big difference between your return on your investment and return on equity. There are a lot of people that think, oh, well, I want to pay off this house because then I could get paid out faster. But it's like you're putting everything in one basket. So say, for example, this property with the 100% financing, the way we're orchestrating it, it's probably going to be like $9,000 complete cash flow. So it's fucking nuts, right? And that's going to be $4,500, me and Alex, right? If you do a 9K investment, $500 a month net, which is probably what this property is going to net after all expenses, that's a fucking 66% cash on cash return, right? But say, for example, this 9K investment, right, which is only going towards closing costs, and the equity grows to say $100,000, right, in the span of like maybe 3 years, and it stays at $500 a month, right? That's only a 6% return. But it's like I could get a better return from that 100K into buying Section 8 rentals, which is going to go and give me at least a 30% return. So it's like, why am I going to keep this money sitting here? It doesn't make any sense for this money to sit there. For me, the second any money that hits my account, the second I'm like, what the fuck can I do with this shit and move it? Because of the way of inflation, the way the political state is right now, it does not make sense for your money to just sit there at all. But if you're in a position where you don't understand that, or you don't look at it with the leverage, right? You're like, oh, well, I'm making a 66% return. So you're like, oh, I'm solid. But in reality, if you wait and just leave that money there and you're not leveraging it, you're not pulling it, you're only making a 6% return on your return on equity, which you could fucking outpace this with even some high yield savings accounts. So there's another thing, right? Into the whole idea of IULs. This is the reason why I opened this shit, right? I think Joe opened one, a couple other people when you're open. The reason why is because you could do fucking 7 things at one time because of this, right? This is the reason why I jumped into this shit. Say, for example, that property I was saying that $740,000 we're buying it out goes to $800,000. That's $60,000 difference. I would not go and just put my my money directly into another property right off the way. Now that I know about this whole infinite making system, because I'm gonna go and get the $60,000. I'll probably put maybe $30,000 into this policy, right? After everything makes sense, I go and pull against it. So now I'm growing the policy cash, like the overall value, which don't quote me on this because Alex actually a way better expert on this. I'm growing the value of this policy at the same time that I'm in a position where I'm buying this property. So the money that hit my account, which is growing my liquid reserve, right? The amount of money I'm pulling is also going into here, right? Into this policy. I'm pulling against it, which is not considered income, right? Because it's a loan, so it's not taxable. Now I'm growing the value of the policy. I'm buying this asset that's also paying itself down. And I also just funded it myself by the bank of Chase, which is giving me that refinance in the first place, which is giving me that $60,000. So that $60,000 from somebody else is going and is growing my investment portfolio and at the same time buying me a house. All while I'm not paying any sort of tax, because it's all tax deferred. I'm just pushing the tax back, pushing the tax back, pushing the tax back. And the benefit of this IUL is that once I'm in a position where, say, I die, if I orchestrated with the trust, the life policy and the death benefit is just going to pay off whatever necessary debts that's needed. If you buy under the LLC, technically your kids are not responsible for that debt because they don't own the company unless they're on the operating agreement. So now I'm in 4 places at once. So it does not make sense. Say, for example, I still have that business credit debt, right? That business credit debt. I'm in a position now where that original debt from Chase got me the position to have that 60 grand and do all this over again. All when I use my own money. I'd rather just keep the money in a position where it's moving to somebody somewhere else as opposed to just paying that off, and that's it. Because in reality, these card companies do not want you to pay off their cards because that's how they make interest. But it's like I'm never going to pay interest because of the 0% period. And it's like if I open 3 cards all 0% interest, I have 36 months and no interest, paying only minimum payments, and I can do whatever the fuck I want. Obviously, you don't want to be an idiot, and you don't want to not configure your numbers correctly. But it's like if you can move with speed, why the fuck wouldn't you? Like, would you rather go and have 1 unit in 6 months or scale to fucking 7? Go from 0 to a 7-figure portfolio in 6 months, or just stay with 1 and be like, well, I'm using all the money I have. It's like, bro, if you're competing against people that are fucking hedge fund managers, you're never gonna have more money than them. So you have to do shit like this, or else you dead ass can't compete, like at all. So let me see, go to here. So like I said, I'm taking from various pots. I'm getting a refinance, which is a loan from the bank that only increases my payment by like $22. That is going into a policy, and then I'm pulling a loan from that policy amount, right? Depending on whatever amount I already had existing in there, and that loan from the policy, which is basically a double loan, is going and buying the property, whether it's in California, whether it's a property that's in Ohio, that's Section 8. But I'm in 4 different places at once, all with the same amount of money that I didn't even come up with. The Chase business card did, because that's what allowed me to get the property in the first place. So now I'm technically in like 5 places at once, all while someone else is paying down the value of the property. I mean, paying down the principal of the property, right, with the rents. And I'm in a position where that profit can either get rolled over to doing the same thing, and that property is going to appreciate in value. So it's like, why would I not try to be in 4 different places at once if I structure it correctly? Obviously, you don't want to be overstretched, you don't want to be over leveraged, but when you guys are buying these properties, right, you guys are all buying Section 8 properties, and you're putting them under your LLC. It's not going to fall on your kids unless you added them to LLC, which I wouldn't recommend at all. And that's the reason why I'm emphasizing on the Section 8 side of it being guaranteed returns, or having even a great tenant in there that's maybe a cash tenant. Because even after, say, you pass away or whatever, I know that's a long time for all of us, you're in a position where that's still growing and it's still getting paid down. So your kids don't go and inherit all this money from the life policy or life insurance policy, and then they're going and just paying down the fucking house, which is like the worst thing they could do. So that is why I'm in a position where I'm very big on the buy, borrow, die, because there are a good amount of debts that just die with you. And you're in a position where your kids just inherit it. And if it didn't die with you, if it's not getting paid off by the rents, then they could just use the value of the policy, which is typically a lot, and just pay it off. And then after they pay it off, now they have something that's tax-free. And alongside that, if you're orchestrated with the right trust, they also don't pay tax in regards to inheriting it, which is the inheritance tax. And since it's paid off, it's going to be a way bigger return. Like if this property, for example, say I passed away and I didn't pay off this property in time, whatever, with my guy Alex, who knows what the rents are going to be right now? Like right now, it's going to be generating like $6,500 a month, right? Say fucking 30 years from now, it's probably going to be generating, I don't know, maybe 18 grand a month, whatever, right? Something around there, 18 grand is ballpark. That 18 grand, if it's that property is paid off, is going to be straight in your pocket. But I was never in a position where I came up with that money myself. No rich parents, none of that shit. Just from leveraging what these banks are obviously doing. They're giving this shit out for a reason. Because most people know who are orchestrated. They'll go and they'll get that business credit card, and they'll go put it on black, or they'll fucking any of that shit. But if it doesn't affect my personal credit report, then it doesn't matter. Like I could fucking show you my credit report right now. So I have a 744 score while I'm doing this. If you do this on the personal side, the personal card, it's not the same thing. I would never recommend that shit. But I've literally, like I said, went from 0 7-figure portfolio doing this shit, and it's not affecting my personal credit report at all, because like I said, it's underneath the entity, or it's underneath the policy. And alongside that, it helps you out a lot in terms of people also like legalities, with you obviously having the LLC, having the policy, because you also determine who inherits it, right? So I know I kind of ripped a little bit. I don't know if you guys have any questions about it. I would say any fucking question you guys have is going to be a great one. Just let me know. But like I said, this is the reason why I'm so emphasis on the size of using leverage correctly. You don't need to use your own money. I started my whole portfolio with only 10 grand in my account, using this. And I have that card I showed you. That's the only card I have with like business debt, which I could pay off, and I could pay off the card too. But it's like, I'm not going to do that. It doesn't make sense. I'd rather someone else pay it off. So I don't know if you guys have any questions about it. You can unmute your mic. You can type it. Let But yeah, I'd rather get feedback from you guys and just rip it in accordance.
No, that was one of the questions I was going to ask you about the using the credit card and how you're going to pay it off in future. So you basically answered my question. That I didn't raise my hand. I was clapping for you, bro.
Oh, okay. I was like, what the fuck? But I appreciate that. Yeah, dude.
Yeah.
Like, think about it. It's like if you have a 20% interest business credit card, right? It's on 20% interest after the 0% period. That's fucking unbelievable. But it's like if my refinance, which only increases my payment by maybe $50 max, is going to be in a position where someone else is also paying that down, but that refinance and that money I get tax free or tax deferred, whatever, is going to pay off that card. Now I only have a $50 increase in expenses, not a fucking a set amount that also has 20% interest on it. So it's like now the card got paid off by the bank, by another bank. Bro, everyone in the US owes money somewhere.
Yeah.
Owes money somewhere, bro. Even if you own your property, your house is outright, you still pay property tax. So it's technically still not even your house. You stop paying property tax, they'll come get it. But now it's like, would you rather have a $16,000 debt that has a variable interest rate or 20% interest rate they have to pay off, which is going to be a fucking unbelievable, right, in terms of a snowball, or be in a position where that refinance pays that off and you only have an increased expense by $50, which you're not even paying. It's the the tenant or it's the Section 8 program that's paying it off, but you're operating, like I said, in multiple places at once. You know what I mean?
Yeah. Yo, so you know how I'm in the inspection period right now?
Yeah.
From your experience, have there been unexpected issues that you had for the inspection report that you didn't really
Oh,
expect?
bro, it happens all the time, bro. It happens all the fucking time. Typically, you see a property that looks picture perfect, you do the inspection, and then you realize there's a bunch of bullshit wrong with it. But it's
Okay.
like that's why I told you, bro. Like you never want to have an emotional attachment to these properties.
Yeah, yeah, yeah.
Reality, you're in a position where it's an asset. It's not something where you're gonna go and occupy it. So if you're able to get the repairs done, you're able to get the credits, and it makes sense. But things happen. Like I'm not had it like where it happens all the time, where to me or to like people we work with, but it does happen, bro. Like it really does happen. It's inevitable. Like it's not something that you're gonna have 100% success rate on. Like there's been times like when I was on my first rental, bro, I would go through even if you walk it, sometimes you can't even see what's wrong with it.
Mm-hmm.
So like there would be times where I would submit like 30 offers just to get like 2 accepted and maybe complete 3 inspections to get one property good, and I'm running with it. So it's a numbers game. Obviously, you have the walking, which could help with a little bit, but yeah, bro, stuff happens all the time. So you don't want to be emotionally attached with this. You're like, okay, well, I'm just on the next one. Yeah.
Yeah, I feel you now.
Is there any other questions you guys have about this whole rip right here? I know a lot of you guys are not necessarily set on using business. I know that some people are using business credit, like Jacob is, Christian is, but I don't want to be in a position where I don't answer anything, and then you guys hit me up later, and I can't really. It won't benefit everybody. You get me?
Yeah. Speak up, speak up.
All right, man. Like, what if you bite off more than you could chew with the business credit card? Like, say you keep rolling over the debt too much, and then you don't get approved for the next credit cards that you're trying to go after, and then say you refinance, and your property devalued. It dropped, and so the refinance you don't get that extra 30,000. What would happen then?
So it only depend, bro. To be honest, it would depend on obviously how much you have. Alongside that, another big thing is like if you have, say for example, $16,000, balance, and it's also, and say you have like a $50,000 limit, so you're technically at like 20% usage. You'll have a higher chance of getting approved with the next set of card. If you're in a position where you're trying to roll that over and you're trying to buy more than what you could chew. In terms of the appraisal, bro, I mean, real estate really ever like appreciates a ton unless like your property just gets like trashed. But there's always a workaround. It's kind of hard to be like case specific with it. But I would say if you say your property doesn't appreciate with it, you could honestly just get another card, and be in a position where you're obviously paying it off with the profits. But then also say, for example, the refinance doesn't make sense because it doesn't appraise where it's at. You could get a HELOC, bro. So a HELOC is basically a home equity line of credit, and you're basically getting a credit card against the property's equity that you have already. and that will just get integrated into your your monthly payment, your monthly expenses that gets covered by the tenant. So I mean, that could be an option too, bro. If your property doesn't appraise, then fuck it, just get a HELOC based off the existing equity you have already. So say for example, I have 50 grand in equity and I have $20,000 on the card, and then I try to get a refinance and pull out, say 30,000 of that 50 grand, and my property doesn't appraise, say it only appraises at the value that it's at right now. I could go and get a HELOC, which is similar to refinance in regards to you getting money from your property. But then that HELOC could go and pay down that card, and then the HELOC rate always depends on what the lender you're with, bro. So there's always a workaround. It's just hard to be very like case specific unless the case is like in front of you. So like, if I was in that position where I bid off more like a Jew and the property only appraised at what it's worth, I mean what I bought it at, I was just looking at getting a HELOC, bro. And if I get a HELOC, I pay that off, and then I just keep moving and letting the property profits just pay off keep paying it off. Does that answer your question though, Joe, or no?
Yeah, for the most part. So like the appraisal thing, so the HELOC, explain that when you say it kind of goes to a credit card, it's like what you've already paid of it.
So HELOC is only from your equity. So the refinance could be off of what the value is and the difference. So technically you don't even have to have that much equity in the property. Like say for example, me and my boy Alex, if it's at 740, I get an 800 and a 60 grand difference is my equity, right? I technically haven't even paid. The reason why the refinance is crucial or essential and helpful is because that 60 grand difference that I'm pulling from is technically not my money yet because I haven't put 60 grand in the property yet. But if you have a HELOC, that's you pulling from your existing equity that you actually have in it. So then you've already paid into it. But the bank loan that you're getting from a refinance is just coming off of what the market's saying that it's worth. You know what I mean?
Yeah, I guess.
As opposed to what you actually have in the property. Because when me and Alex doing the 100% financing in 6 months, we pull at 770 and we get that 30 grand difference. Technically, there's no way in fuck that me and him will have 30 grand in equity because of obviously the interest rates and all the above. Mm-hmm. So that's why we're able to pull a loan up against what the market's obviously valuing you at. So there's always a workaround, bro. But I would say either the HELOC, you can go and do like I said, the refinance. You can just orchestrate, reconsolidating the debt. There's always a workaround, bro. And especially once you get in a position where you use the card often, and there's always there's a relationship with that bank, bro. They won't let you fall, because if you fall, it honestly is more of a headache for them than it is for you, I guess. So say for example, you're in a position where you have American Express. They're very big on relationships, and you have fucking 12 grand in a balance, and your interest ends in like a month. You could go and say, hey, look, I'm trying to get this other card because I want to roll this over because of my situation. And depending on your relationship with them, say you've used them for a while, you spend a good amount of money, bro, they'll literally just fucking like approve you on the phone. I've hands-on experience that myself. So if you bite off more than you chew, you sometimes get bailed out from them because they don't want to go and send you to collections, because they send you to collections if you have a late payment or charge your interest. One, if you charge your interest, you're not going to work with them anymore, and you try to just get out of it as soon as possible. If they send you to collections trying to get that money back, if that's like the worst case scenario and all goes to shit, typically most people just fucking file bankruptcy and they wipe all their debt and their credit just gets built back, which costs them more money to go and chase you. So it's like they want to help you out. They either want you to get charged interest so they can make their money, but they also don't want you to fucking default, and they don't want you to fall apart because then they have to go and chase you. So there's always a workaround, bro. But that's why I was saying that you got to be very careful with the way that you do your numbers to make sure everything makes sense before you jump into it, and not just biting off more than you chew. Like, you don't want to go and get things lined up if you're not in a position where it makes sense for you. But even if it doesn't make sense for you for that time, you can go and roll it over to do something else, like either your business or your fucking titles or whatever the fuck, so you can move faster. It's like, would you be able to move faster with 10K, or you move able to faster with 100K? So that's the philosophy that I've had.
How soon do you look to refinance your properties?
It depends, bro. Sometimes I don't refinance unless I have to, bro. Or like, not that I have to, but unless it makes sense. So say for example, that card that's the 16K balance, right? And some of you guys may see that, like, what the fuck? Like, why do you have it? But it's like, if I could pay it all off tenfold, yeah, I'll just keep it. Like, here, you guys, like, I'll let Chase fucking take the L on it, right? So say for example, that shit, I have to call again. The interest period ends this year. I think it ends in like December. Say for example, I don't want to go and do the liquidation, the transfer, and I'm just like, here, let me just pay it off, and then I'll just go get liquidated card or a different one, right? I would say, okay, well, let me just refinance after 6 months of this property, and then I'll just go and pay that off and only increase my monthly expense on that house by like $50. So then I'm in a position where that the whole thing's clear, chasing out of my ass. And then now it only increases my expense by $50, which I'm not even paying. It's the tenant paying, and obviously Section 8 paying. And then I can go do whatever the hell I want, whether it's the new business credit, because now my overall utilization is lowered, or I can just go and fucking refinance from the Section 8 unit. So it ultimately always depends, bro. But if I don't have to because it doesn't make sense, as in like there not being a deal in place or being in a situation where I don't have OPM that I have to pay back, I honestly I wouldn't refinance unnecessarily. Because if it's unnecessary, often the fees that you pay from obviously orchestrating the refinance with the lender, so it's you're obviously integrating into your loan, which is obviously adding to your monthly expenses. Unless you need to, I wouldn't say do it. But if you're in a position where like I want to scale fast, then it's obviously crucial to leverage something like that because you're just going against you're letting the bank pay for your shit, bro. You know?
Yo, Javier.
Yeah.
So remember whenever you did your 50-50 for one of your first properties?
Yeah, give me a second. I'm moving out of the sun, bro. It's hot as fuck.
Yeah, I feel you, bro. It's
So-
humid.
Give me right here, bro. Fuck that. I'm out of this shit. Oh, fucking that's so. All right. Yeah, rip on me, bro. My bad.
So remember whenever you did your 50-50 for one of your first properties along for your store?
Yeah, the first one.
Did you ever refinance that, or you still have that property?
No, bro. I never. Oh, I still have that property. I didn't refinance it because I didn't need to. Like I had the whole thing orchestrated, so I was in a position where that car's already like that whole debt, or whatever, the business credit, that's already paid off.
Yeah.
Because the profit just paid off because of the return that it gave me.
Okay.
So, like I said, I 50-50'd it. That's actually the property that's making fucking well over what is it like 2,300 gross, and the mortgage only $800. So it's like that 1,400 or that 1,350. You want to be very conservative, but just pay it off like this, you know.
Yeah.
And then that's me be also just like adding to it, you know. Me just like, oh, well, I'll just pay it off, and then going and doing my other thing somewhere else. So it's like,
Yeah, that's a good ass deal, bro.
a matter of what your situation is and matter of what your strategy is in regards to how fast you want to move or whatever.
Yeah.
Does that answer it though? Does it make sense?
Yeah.
But is there any other questions you guys have or not? Let me see. So everybody else you rip, bro. Ask whatever the fuck you want so I can rip it all off the first time. So Angel, you unmuted your mic earlier. I know you had I think you had a question, no?
Yeah. So I was gonna ask, so what's your next step once you finish liquidating both Chase credit cards? Like, what's the process on that? Because you can't create another LLC and get more Chase credit cards, can you? Or how does that work?
You can, bro. Yeah, you can. I've been in a position where even right now, like I don't know if you saw the card that I opened. I opened that gold one because that one's just for like the expenses. I just pay it back. Like say running ads, whatever. I just pay it off right away. But in regards to the Chase side, now that I have a whole new entity, I could dead ass go and fucking get business credit on this entity, liquidate it, buy another unit, or I could liquidate it, transfer it from my business checking account with this LLC into my personal account, and then my personal account to the other business account that has that debt or whatever, the business credit card debt, and just pay that off. And I'm chilling. And now the balance is over there. I have another 12 months, 24 months, 36 months, depending on where you orchestrate it. All while someone else is paying it down. I'm not paying it down. So you could extend it fucking forever, bro. Literally, you can. If you really want to push it, you could extend it forever.
Okay.
It depends on what the limit is, though. Like, if you have like $100,000 and fucking that shit, it's still possible. Like, it's very much still possible. It's just a matter of the way that you do the orchestration and stuff. But
How it's structured.
yeah, the way that you structure it, bro. But like I said, you could dead ass open a brand new LLC and get it funded and fucking pay off your old LLC's debts and just move on to the next one. But it's like, you have to have an entrance and an exit strategy. You can't just say like, I'm just gonna do this, I'm gonna do that, and that's the deal. You know, it's just a matter of like what you're trying to get out of obviously getting into that investment, and then also what you're trying to get out of it. You know, so it always depends on your aggressiveness as an investor. Mine is big time. So I'm like, okay, I want to move fast. So I'm a fucking borrow, and then eventually just refinance, pay this whole shit up. And I just, instead of trying to save the whole way there, I moved a lot faster. And then, like I said, all while someone else is paying it off, and it's also appreciating value. So it's like, depending on your aggressiveness, is the way that you're gonna move. Like if you're really trying to be aggressive and raise as much as you can, bro, you can open 3 LLCs and get them all funded. That's like, does it make sense to do it though? You know? Does that answer your question though, fucking Palmero, or no?
Yeah, for sure.
But yeah, that's always a good question to ask though, bro. It's like, oh, what is my exit strategy off of that? Because you raise a business credit, boom, you do your thing. But it's like, what am I gonna do next? Okay, well, boom, just pay it down and leverage other people's money, bro. Like, unless you're fucking Rothschild or whatever the fuck, there is more money that is other people's than there is yours. So why am I using it? You know? Any other questions that you guys have? Let me see if I can.
No, I got some questions, but they gotta be off camera though.
The what?
Yeah, I was fucking with you, bro.
Say what the fuck? Christian, Jacob, Alexis, Ricardo. If you have any, let me know too. Make sure I get that shit cracking, boy.
Hey, any of y'all got sick, bro? Bro, this weather is fucking.
Bro, the weather got me fucked up earlier too. I got like what felt like a sore throat, and I was like, bro, this shit better not start right now, because I started feeling good. I was boxing all the above, and then sore throat. I was like, fuck that shit.
I swear, bro, that's what happened this week. Now I'm all fucked up.
Yeah, no, it's all bad, dog. But shit, yeah. If you guys have fucking any last questions or not, I'll probably just call it wraps. Like I said, I just want to make sure everything's addressed on there. Like I said, I don't expect you guys to have fucking questions all the time, because a lot of you guys are in a situation where it's like getting handled as is. But yeah, I just want to go over that and why I'm doing that, and then you could also orchestrate in regards to your personal, but you know, your personal situation in regards to how aggressive you want to be, or all the above. But like I said, there's more fucking money that's other people's than there is yours. So it's like, why are you not gonna leverage this shit? You know? But let me see. Yeah, let me see. How the fuck do I move this shit? Christian, Alexis, Mike, no questions? Ricardo, let me know. Y'all been silent, bro. Y'all probably fucking dipped. Let's see. Yeah, they probably did dip. But that's on them, bro. That's on them.
Oh, he driving, bro. So like he driving.
Oh shit. All right. Yeah. Alex, rip your shit, bro. Like I said, you can just unmute your mic, bro. Just unmute your mic and rip. You go fuck. You don't gotta be all proper and all that.
No, man. I put it up on accident. I didn't have no questions, but no, I've been here, man. Everything's straightforward. Like, you know what I mean.
Yeah, that makes sense. And then let me see. So Jacob, I don't know if you're listening or whatever, but
Yeah.
did you see what I was talking about with regards to the IUL and all that?
Yeah, a little bit. Yeah, it makes sense a little bit.
Bet. All right, well, I'm gonna text you right now, and I'll probably get you synced with Alexis, bro, so you can see how it is in that regard. So you can get that shit cracking while you're in a position where you're obviously orchestrating obviously the business credit, and then you're also pre-approved to get that shit cracking. So you're knocking out like 3 birds with one stone.
Exactly. Hell
All
yeah,
right, so I'm gonna sync you with them. Christian, I'm gonna hit you on the side too to make sure that you're on top of the videos. But I'll wrap it up here. If you guys have any other questions that has nothing to do with this, or just fucking anything, like I said, you guys can always text me and all that. But I'm gonna try to keep these calls either just once a week. I'm gonna probably push it twice a week, just about obviously different things. But yeah, you guys just let me know if you want to move it to once or twice. But I'll probably keep it for once right now, and then probably just bump it up if there's more things that I'm coming to. Probably with the new, with this property that we're purchasing, I'll probably be talking about that into another call. But I'll keep you guys posted on it. But let me see. But yeah, like I said, I'll catch you up.